Hi, welcome to the Market Alert for Wednesday the 28th of March 2018. So yesterday the pound giving up some of the gains that it's made during the last few weeks. Market started off by moving higher. We can see the buying, and then it was met by selling, which was a lot higher in this bar than the buying had been in the previous bars, and the range was narrower as well. And then we had the sell signal. We see the market moving lower, down over 100 pips there for the pound, and not going down on any great selling. And then all of a sudden we see the market turn around and we head back in the opposite direction, which gives us this type of price bar, one that I've been talking about for the last few weeks. Not the highest of volume though, but the price action coming off those lows, and now the market free to move to the upside. So what I would be inclined to do is just to mark up 76% on this, and you can see that the market's already trading at this area along with the other fib as well. So in order to move higher, the market's going to have to drive through on increased volume, and also it's got to contend with the high here as well at 142.44 in order to move higher. And then of course you can see we've got these other two in the way should the pound continue to move higher. But a very strange day yesterday. I looked for news but I couldn't find anything at the time why it dropped over 150 pips and then came back 50% of it. Very strange there for the pound. Probably something to do with Brexit or whatever anyway, but nonetheless the pound still in the up move there. And US today, what have we got for news? Usual stuff: final GDP, crude oil inventories, and member Bostic speaks at 5 PM. Medium impact news item for that. Well, we're heading into the Easter weekend. We could see things start to calm down a bit. However, saying that, the Dow yesterday, a lot of volatility in this market, so we're going to have to adjust the settings because of missed trading opportunities. So I played around for most of the afternoon and settled on 50 and 30. Again, it doesn't really matter what the settings are or how big the stops are, it's how much you risk per trade is the key. So you lower the bet per point in order to adapt for the market. Now there's also trades inside of the what would we normally deem the quieter time if we go to primary trade times. And there are two ways to do this. Let me just go back to here. What we want to do is try and pick up these trades in the not so quiet time now. We can do this by clicking or removing the hide indicators outside of primary trade times and click apply, and that will bring it in. The only problem with this is that you will get the pre-market session trades like this now overnight. It's fine if you want them, but if you don't, then the more elegant way of doing this is to actually just remove the period 2 and switch this to 8 PM, let's say, just to give you a chance for the last hour, and then click apply, and then you'll see those have disappeared off the chart as well. But the ones in the quieter time have now appeared there. And these settings at the moment, if you have a look back, you will find that they're quite good actually, given the range that this market's currently trading in at this time. So that's something you may want to consider. But like again, the stop is going to increase because of the volatility, but then that's managed by the bet per point and discipline in money management. But it does give you the opportunity to trade these signals. So the Dow, yes, let's just have a look at the detail now. This started off moving high, but then again was hit by the selling. There's a few bits of buying in between. Market settled, and then we've got the classic. If we have a look here, let me just take that out of there. From there to there, you've got that 76% retracement. Market up back to 76, and then again this will be back to 76, and then it managed to move higher And all the way along here, you'll see the same thing, 76% there. There'll be a 76% from there, and then the market. Whoops, wrong one. Let me just take that off. You'll see the market then moving lower, back below the 20-bar average. First clue here that things aren't going to go well, and then again you'll see the same sort of chopping and changing, and then eventually the market moving to the downside there as well. Just go from the high to the low, you'll see 62% there, and all the way through this. It's again, it's a really good way of monitoring how much momentum the market's got in the opposite direction, and whether it's going to continue higher or not. If you look here, you can see that the market came down and then bounced back. The 20-bar average is in the way, and also if you look at what I'm doing here with the cursor, you can see that from across here to here, that would be the market coming up and finding resistance to the left. So if I wanted to work out where the potential 76% was on this one, I can just roll back to this high, come down to here, and that will put me straight in the area. So what I'm doing is just rolling the fibs back as this market moves higher. I just find out where the parallel line is to it, to the left, see where the resistance is, and then just move up to the recent highs and work my way back until ultimately where we've got this defined point that's left there, this swing point, and to there. And then I would, if the market had come back up to this level, then you could have gone back down that way, but it didn't come that far. It was just rolling its way back up on the left side there. So on the overnight, the market fairly choppy. It's still a good range on the overnight, over 100 points plus. So still some volatility around in this market at the moment, and it's looking very, very weak. Market coming up yesterday to the 76%, didn't quite touch it, but again, by using that rolling mechanism, you can see where the market is actually trading. You've got to watch for, let's just get rid of that. At the moment, we've got from here to here on the downside, and you'll see the market is heading back to that at the moment. So once again, we're in an area where we could see some support, but if it's taken out, then we're going to see a test of this, well, certainly this low. This is going to be the crucial one here, this 23,109 that was put in place in January. If this is taken out, it's down we go, and I have a funny feeling that is going to be the case as well as we come back over to the left here and retest these lows which were picked up here, and now we're heading back there at this time, certainly switching towards a bear market. One other thing you can do as well, one indicator that is used in the industry to measure the longer term trend of a market, is a 200 moving average. I've got one here, so we'll just click on show selected, and you will see that the market is heading back to this point as well. I'll just move this over. So you can see again at this area, it is going to be crucial for the market through the 76% down to these two here. Will have broken the 200 bar moving average, which if we just scrunch this up, you'll see has been in place for a very long time. Actually, there you go, all the way back to 16. There you go, that's the last time we saw it broken. Was December 2015. Each time it's been picked up on these levels here. So an area of crucial support for this market is in this area should prices continue to move lower. Implied volatility moving higher, up nearly 2 percentage points yesterday, 1878 to 20.85. So continuing to move in the right direction with the underlying weakness, and that will certainly increase if we take out those lows. Finally, Bitcoin continuing to move lower, heading back down to these areas that we have drawn in here. Nothing else really to report. You see that yourself, self-evident there. At the moment, it's still moving lower. Right, that will do for this one. Bit of a lengthy one today, but I wanted to impart a lot more information with regards to settings and so on. Right, anything to report, let you know. Other than that, as ever, thanks for watching. See you in the next one.